Hello, good people. Emmanuel San Safali bringing the Promise Insurance Show. Today, I want to start by previewing this nice game called Pesa Smart. For any one of you who have ever played the game of Monopoly, this is the Ugandan version that I can recommend. It's a very good game, a very good, more or less, card game that looks very similar to how Monopoly works. For those of you who have played the game of Monopoly, remember Monopoly, you always start with some money. All players, if you are whatever number you are, you begin with a certain amount of money, maybe say $1,000. In this case, you will start with some kind of shillings, maybe Kenya shillings, and then for Monopoly, you have to just keep using that money to purchase properties, then to add value to that property, because every time they get into your property, someone has to pay rent. Now, to get more rent out of it, you have to get a whole street, and then you build. Now, that is when you keep getting more rent, and that is how you can keep winning. There are some elements where they give you chance, or there are those chances where you get into a chance place and then they maybe penalize you, you pay taxes, you pay all those. But one element that misses out is the insurance place. Just like this game actually brings in an element of insurance, because this card has lots of options. It has protection cards. There are those cards like insurance cards. Okay, they'll talk about those protection cards. Then there are loan cards. Of course, you can actually, whatever property you get here, you can actually get a loan out of it, of course, at a half the cost. And then there is the death cards. Life is uncertain sometimes. Okay, death is a certainty. It has to happen. You just don't know the time when it's going to happen. Then expense cards, and then income. This is the income cards. This is the cash actually used. So the cash looks something like that. Let's look at the impact of this game. They have actually mentioned that on the website of Pesa Smart, that players stop fearing loans. So this game is about people who take out loans to build their businesses. And then you have to start planning for retirement, 94%. We have to start tracking and recording finances, very important. Then all teenagers want to start open savings account after playing this game of Pesa Smart. Then want to start a business to make money, immediately play this game. Then acknowledge that assets are better than cash, actually. So assets help you to get, some cash flows. And then insurance is important for dealing with crises, So that one we shall see. And let's also start putting aside cash for events. Now, financial life after death also needs to happen. Now, there's a time I mentioned about a product that we featured here called the mortgage protection. This is where people take out loans. They have used their collateral as a loan, collateral to get a loan. They want, say, a value of about 1 billion, and this is our Uganda today. Such a client will be charged about 9.5 million, basic. Then you find that if they have any condition, this person was in their 30s, so 39, they are getting to 40. You will find that such a client is paying about 10% of the value, which is about 10 million. This is very important because that money becomes pote after 1 year. You just keep renewing because it's a level premium for the period you're going to take this loan. If it's reducing, you will find that in the second year you to come to about 8.4 because your value has actually reduced to about 800. This is the assumption. So it go reducing like that as the year go by. But there are clients who take out loans on a yearly basis. They want to pay within 1 year, and that's the most businessmen we're seeing. Now, as an alternative to that, there's a new product that I would like to feature called Prudent Life. It's produced. Let's just listen to this video for us to understand better how it plays along.
Prudent Life, your ultimate shield for a financially secure future. Life is full of uncertainties, and it's our responsibility to financially protect what matters most, our loved ones. With Prudent Life, you're financially covered in every situation life may throw at you. In the unfortunate event of natural or accidental death, we've got your back with 100% or 200% payout respectively. But here's the game changer. If none of these events occur during the policy term, we've got a surprise for you. Yes! You heard it right. Prudent Life offers 100% refund of premiums paid if none of the events mentioned happen during the policy term. It's our way of saying congratulations on a safe and healthy journey. Prudent Life isn't just insurance, it's a cornerstone of your broader financial security plan. Your family's future is our priority. And that's not all. With Prudent Life, you get one free health checkup every year, ensuring you stay in the best of health to enjoy life's precious moments. Don't just dream of a financially secure future. Make it a reality with Prudent Life, your partner in protection, your shield for life.
Prudential. Let's live life together. Turinawi.
Now, how does this product work? It's very important we use examples. Just like we used for the example of the person who took out a 1 billion loan, the premium was about 10 million. We used the same, we asked this company to make for us a quotation of a person in their 30s, late 30s, going to 40s. So, and now the catch is you pay this premium, it's a level premium up to the retirement age. So if someone is 38, you multiply, you just add, this is 38 plus 17. That means the retirement age is going to be 55. This is early retirement. Okay, you can agree with the insurance company that I want to pay these premiums up to my retirement age. Early retirement, 55. What will be my premium? What am I being covered? You said death, permanent disability, critical illness. Remember, what are the other policy benefits? They're talking about 100% sum insured, meaning your value of 1 billion is going to be so. We're going to look at actually the actual premium for that. Then accidental death, 200% now, meaning they'll pay, this is payable on death due to accidental causes. So if anything happens to this person within, any time, as long as it's accidental death, we shall pay actually 2 billion. That's the 200%. Then total permanent disability, that is 100% of the sum insured, then a maximum of 300 million. So for this client who is already at 1 billion, we shall pay 300 million for this permanent disability. Then it only stops at the age of 65, below 65 years. So if there are those older clients or who take out a policy like this, it may not serve you very well, because at above 65, we believe you are already very prone to very many accidents. Then critical illness, 50% of the sum insured, also limited to 300 million shillings for people who get sick and they need to use some of their policy to get them covered or to get expenses paid. Then last expense, 10% of the sum insured is immediately paid on death up to 10 million. So for this kind of policy, we would pay up to 10 minutes, capped to 10 million shillings in case. Now, remember we mentioned all these are the benefits. This is very clear. However, this system is still capturing premiums based on monthly basis. Much as we say this is annual premium. If we had wanted annual premium, meaning this is going to come to, let's see, it's going to be 2,030,000. 416, okay, let's just round it up, times 17 years, remember? Oh, sorry, let me just divide by 17. This is for the whole 17, this is monthly, remember? So this comes to 24 million. 24.3 million is actually the premium you'll be paying for this kind of client. So, much as we're showing here, 2 million, maybe let me put this somewhere here so that you can notice the difference. Annual premium of 24 million, much as on the statement, because it's still being developed, it will show 2.3, but it's actually 24 million. But let's do the simple mathematics. After the 24 million, you multiply this by 17 years. How much you'll be paying? Let's say if nothing really happens to this person up to retirement age. Remember, they mentioned the last benefit that we are paying you 100% of whatever you have paid out to the insurance company, should nothing happen to you. So after age of 55, you can retire and come back to the insurance company and you say, actually, my money has been there. They can give you a cash value. Policy would have acquired what we call a cash value. It has been growing over time because within these other periods, it's a pure life policy, because you're saying with your 24 million, should anything happen, we're going to pay 1 billion shillings to your family members. Anything happening to you as the person who took out the loan. And another thing about these kind of policies, you can assign them to the bank, to the financial institution that is giving you a loan. So it is something that you can actually use both ways. So it's a little bit, of course, more expensive compared to this other product, which we were mentioning, of the mortgage protection, because mortgage protection is actually a term life policy. It is a short-term policy. It's renewable and it's level. So it covers you more, but this money does not come back to you at any one point in time. Yet, it's also quite significant. It's about 10% of the value of the loan. So let's look at another option. Of course, there are some other details here below, like exclusions, things like drugs. That is very basic. So, and then the person who will sign to it. Let's look at someone who is coming close to 49 years. Now, this person also wanted to retire at age of 55 years, because the minimum period for having this policy will be 6 years, because we know Ugandans don't like long term, but you can actually do long term. You'll find that you're actually paying less premiums. Let's look at someone who has taken out the bare minimum of 6 years, who is aged 49. He wants to retire at the age of 55. You'll find that more or less the same benefits. This premium will be, remember, this system only captures monthly premiums, much as for us we want to know what is the annual premium. So let's go and clear this and say 6.20333 times 12 months, that is 74 million. So this person will actually be paying 74 million if they can afford, because they are older. They are older and they are going to be insured for a shorter period of time. So because you're being paid for over a shorter period of time, you'll be paying much more, 74 million, but for the same value of 1 billion shillings, which is up to here, it can actually go up to 2 billion shillings. This is any client who wants to take out a loan of so much and you can actually assign within these 6 years or the 10 years or the 17 years, you can actually also have needs to take out some credit, which is important. We need credit in this kind of life. Even our government is highly indebted. I think you noticed there is a report we shared earlier where our government was actually indebted so highly. Okay. Now you will find that by the end of the 6 years, this 74 million would have grown to about 446 million. So this money is actually coming back to this client. So should nothing happen to them, they can acquire this cash value. This is something that is straightforward. I hope you'll get to take action. Then let's look at someone in their 50s. They want for 10 years up to the age of 60. That can also be a retirement age, because the retirement age you usually use 55, 60, and 65, then even 70. Okay, so for this particular client, you'll find because they are saving or paying these premiums for a slightly longer period, it's going to come to 4.718. Okay, this is it. Okay, let's just round it up. 2 times 12 months. So that is 56.6 million. And then over 10 years, it will come to about 556 million. So which is better? Taking out this policy, yes, you are paying a little bit more premium, but this premium is coming back to you at any one time. But also you're getting to get loans or whatever worth up to 1 billion, for instance. Whatever amount you want can be worked within. So you need to tell us the value you want to insure. so that and also the kind of dreams that you have, the kind of credit value, such that you are actually covered. So with that said, of course, I've talked about the credit, the credit score of Ugandans as a country is also not the best, but this can also help us to understand and take out these kind of policies. So for more, for taking action this year, please reach out, ask us for the quotation that you need. There are always colleagues that work at this company. Hopefully, it will come and speak more about this package. It launched it in the year 2024, I think in the month of February or January, one of those months, and it's a very good product. I've reviewed it. I think it's a very good product on the market that can actually give the mortgage term life policy a run for its money. So let's think both ways for those people who have loans. Maybe another thing I need to point out is whenever banks ask you to take out these loans, please endeavor to have a copy of these policies. Banks for a long time have been asking us to pay insurance monies, but they don't give you copies of the insurance policies. So let's use this opportunity, or after we've learned this, let's actually embark on asking and demanding for these policies from the bankers or from the credit institutions. So with that said, let's just share this video again.
Introducing Prudent Life, your ultimate shield for a financially secure future. Life is full of uncertainties, and it's our responsibility to financially protect what matters most, our loved ones. With Prudent Life, you're financially covered in every situation life may throw at you. In the unfortunate event of natural or accidental death, we've got your back with 100% or 200% payout respectively. But here's the game changer. If none of these events occur during the policy term, we've got a surprise for you. Yes, you heard it right. Prudent Life offers 100% refund of premiums paid if none of the events mentioned happen during the policy term. It's our way of saying congratulations on a safe and healthy journey. Prudent Life isn't just insurance, it's a cornerstone of your broader financial security plan.
Right, we have heard about that, even the medical plans. Just as a recap, another recap, this is the game that has featured today. Very interesting game. We always start out with some kind of monies. We are working, that's the kind of money we usually get, but those monies have to add value. We keep acquiring assets, but these assets also need to be protected, and this is one of the solutions. The insurance covers you. It will cushion you against expected expenditures, and you find that expenditures that come with those kind of things like death, the professional fees are quite high. Yet if you had insurance, it's the cost is so low compared to what you would have actually paid out. So let's till next time. I'm Emmanuel Safali, bring you the Promise Show. Please remember, if you have liked this video, please remember to share some feedback on the comment section of the channel below. Also reach out to Prudential. We shall bring more of Prudential, the management, to speak more about this product. And till next time, I'm Emmanuel Safali. Be blessed.
Family's future is our priority. And that's not all. With Prudent Life, you get one free health checkup every year, ensuring you stay in the best of health to enjoy life's precious moments. Don't just dream of a financially secure future. Make it a reality with Prudent Life, your partner in protection, your shield for life.
Prudential. Let's live life together. Turinawi.